Here's this ETF. You can subscribe to it through your retirement account, your pension fund. You can buy it on a stock exchange. You've got all these, respectable looking folks selling this to you now, saying this is a way to diversify against inflation. And the banking system reaps fees. And we've seen how successful it's become. So I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know that this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
And also, the government quite likes it because the money's actually not leaving the system. It's not you and I, opening, having our ledger and taking our money outside of the system, which is, why, when I saw the European mess back in 2012, that's what got me into Bitcoin.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal and Arthur Hayes discusses Bitcoin and crypto. According to Raoul Pal, the government sees the benefits of this approach as the money remains within the system rather than being withdrawn by individuals like you and Raoul Pal. With a keen eye for financial trends, Raoul Pal foresaw the European mess back in 2012, prompting him to explore alternative ways of managing our money outside of the traditional system. That's what sparked their interest in Bitcoin, as they sought to break free from the traditional financial system. However, these individuals seem to be more aligned with the status quo. Assessing its performance without stepping outside the system is quite convenient. It seems that the government's decision may hinder individuals from opening a Coinbase account and embarking on their financial journey. Arthur Hayes believes that these ETFs are gaining acceptance, presenting a crypto derivative that allows you to engage with Bitcoin indirectly. Since withdrawals and redemptions are not possible, you won't be able to access your funds or convert them into dollars in these ETFs. Bitcoin is simply a means for individuals seeking to invest their money. Jumping into this crypto life raft without wanting to put in the necessary effort and handle the challenges of dealing with private keys and being familiar with OPC and all the things Arthur Hayes refers to can be quite bothersome. However, it's important to remember that freedom comes at a cost. Here is an ETF that you can subscribe to through your retirement account or pension fund. It is available for purchase on a trading platform on the stock exchange. You have all these seemingly reputable individuals trying to sell this to you, claiming it's a viable option. It's important to diversify your investments to protect against inflation. Additionally, it's worth noting that the banking system often benefits from fees. We have witnessed the success of this approach. It seems that there is a growing belief that there will be a Bitcoin ETF, an Ethereum ETF, and even a Solana ETF, regardless of any politician's stance. It indicates that the banks are well aware that this is their strategy to mitigate the impact of being compelled to purchase these unfavorable bonds, and lots of things Raoul Pal and Arthur Hayes discussed, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
On this is they actually know what they're doing. They know they're debasing the currency, and they've all kind of agreed it. It seems. How do you think through that? Because we all say the central bankers are dumb. I'm not sure that's true. I think they know exactly what's going on.
I don't think they're dumb, and I think more so the politicians, right? If I'm a politician in any system and I have the ability to print money, what do? I give away free shit to people for their support, whether it's a one man one vote democratic system or it's some sort of fascist communist system. It doesn't really matter. At the end of the day, the people in charge promise the majority of the people who aren't that wealthy, hey, I'm going to do something for you. Now, they don't tell them I'm just going to print money and debase your currency to pay for it. But again, it's all the same game. There's nobody in the world, however many elections are happening this year, except for maybe Argentina, which are hey, we've spent too much. We need to cut back on government services. We shouldn't be doing all these things. We're going to balance the budget. It's going to be tough, but we take our knocks now and the future is bright. No one's campaigning on that anywhere in the world. And so if that's not going to happen, then why would you stop?
Yeah, my view on that is they don't want to blow up the baby boomer complex. The great baby boomer complex is where all the savings are. They are baby boomers themselves. They don't want the equity market to go down because that's the collateral of the system. So they protect that lot and sacrifice everybody else in the entire system. Because a retiree, it's fine. You debase the currency, your equity, your share portfolio goes up. You've got higher interest payments right now. They're all fine. It's everyone else is totally screwed in this.
Yeah, but again, thankfully we have crypto, so there is a way out.
So let's talk about that. So this crypto life raft, the regulators are kind of struggling still with letting it happen. They want to throttle it. How are you seeing the big picture play out of the regulation, the adoption, and how governments allow it to happen and that kind of phasing?
So there was a paper written by this guy at Columbia, Columbus, I can't pronounce his name. And it was about fiscal dominance. Basically, the federal government has issued so much debt, the spending is so high versus the tax receipts, that any sort of notion of independent central banking goes out the window, and the central bank becomes a tool of the federal government to pay the bills, right? And if you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, and called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks. They're not going to make any money on that. So, what do they do starting in 2023? All of a sudden, the Winkle clowns, they try to get an ETF approved for 10 years. Did the Lord's work for 10 years trying to get this ETF approved in the US. Still don't have one, by the way. And Larry Fink, within 6 months, gets an ETF.
According to Raoul Pal, they have no intention of disrupting the baby boomer complex, the revered baby. There is a significant concentration of savings in the boomer complex, as they are primarily comprised of baby boomers who are cautious about the performance of the equity market. The market is experiencing a downward trend, prioritizing the protection of the system's collateral over the well-being of other participants. As a retiree, it's important to consider the impact of currency devaluation on your equity and share portfolio. It's crucial to monitor how these factors can affect your financial situation. Currently, the interest payments are all in good shape. It seems that everyone else is in a difficult situation, but again, we do have crypto as an option, which can serve as a way out. Let's discuss this crypto life raft in more detail. The regulators are still grappling with the idea of allowing it to happen, as they are inclined to impose restrictions. How do you perceive the situation, understanding the broader perspective of regulatory adoption and how governments facilitate its implementation, including the various phases involved? Let's back to the Raoul Pal and Arthur Hayes interview.
And also, the government quite likes it because the money's actually not leaving the system. It's like you and I, opening, having our ledger and taking money outside of the system, which is, why, when I saw the European mess back in 2012, that's what got me into Bitcoin, because I just wanted to be outside the system. But these people aren't. So they're just kind of renting the performance of it without leaving the system. And that's a nice way for the government to say, well, guys, you play in this, but it's going to stop them opening the Coinbase account, at least starting the journey.
And it's better to do it this way than to ban something. Because when you ban something, then people are like, oh, well, why are you banning it? Maybe I want to have some of it. Look at the illegal narcotics trade around the world. You tell people they can't have some, they say, no, I'm going to have it. So why not just say, oh yeah, you want crypto? Oh, here's a BlackRock Fidelity, blah, 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 ETF. It's safe. It's custodied and your bank that you know and trust, blah, blah, blah. Come on in. So I think that is, for some people, their crypto thing. They want to take their fiat, trade crypto, and earn more fiat, which again is fine. It's a choice that people get to make. But if you want to take your fiat and save it in something that's outside of the system, then you have to go and buy physical Bitcoin and deal with what the issues that come with owning physical Bitcoin.
And for me, I know the government's probably thinking, great, we've got everybody contained. I actually think a bit reverse. It's a Trojan horse. Because once you start to learn about this space, as you go down a very, very deep and long rabbit hole, and you realize why you're doing it. And before you know it, then the ETF doesn't make sense for you anymore because you want to diversify. So my mental model for this ETFs is we got crypto land and fiat world, and this is just a trade deal between the two. So hot money flows. If you think of VC as FDI, and you think of this as hot money flows, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well, relatively free.
Raoul Pal understands that the government may be pleased with the idea of having everyone under control, but he has a different perspective. Learning about this space can be quite captivating, as it takes you on a profound journey. After delving deep into the subject, you start to understand the purpose behind your actions, and before you know it, the ETF no longer appears logical and no longer has the desire to be solely focused on financial analysis. Instead, we aim to broaden our horizons and explore different investment options. Raoul Pal's approach to ETFs provides us with a valuable mental framework to navigate this new direction. We have Cryptand and Fat World, and this trade deal between the two is really heating up. Money flows when you consider VC as FDI and view it as hot money flows. This trade deal is a significant event for Raoul. It holds a similar level of importance for him as China's opening up after the WTO agreement. Since there is now a free trade agreement between them, it can be considered relatively free. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.